Today is the 28th of November 2013, and we'd like to welcome you back again to megatrade101.com's video presentation post Thanksgiving holiday. And let me greet everyone happy Thanksgiving. This is Alexander, finally introducing myself to you, and this video supports our November 25th market analysis, with concentrating more on price action analysis based on the major currency pairs, cable and the yen. As we made mention again in our November 25th outlook, there has been mixed reactions from fundamental data for the past few days, which affected the yen weakness, nearly isolating from the US dollar. With the US dollar index, the DXY, registering with a high 3 weeks ago at the 81.46 basis point to as low as the current price levels at 80.46, where the critical price on the support looking at the DXY would be around the levels of 80.30 basis point, where any price below the 80.25 would be a critical bearish price action that would be expected for the US dollar index. That's basically the first key price level that every trader should be looking at as far as the US dollar index is concerned. And what we have here is the weekly chart formations for cable, the dollar yen, as well as the sterling yen cross rate, where we did mention that the dollar yen has maintained its directional trend higher and have initially reached its extended channel price, which is about here, with the high levels at 102.60, as you can see on your screen, and touching a channel resistance at 102.30 and going beyond it. 102.22 is actually the working price right now, and as you could see that here it came breaking from a symmetrical triangle formation that is looking at it on a technical basis, where prices has moved, broke its resistance here, and normally, as you could see, that the apex here on a technical angle does not normally get filled in, and that is one of the idiosyncrasies looking at it on a technical angle, where symmetrical triangles apex are not filled in, and normally prices would break up or down. In this case, dollar yen did penetrate it here, and prices are way above the moving average on a 10 daily basis, 99.77. as you could see that the prices here now is at 102.23, with the Williams percentage range just about on the higher note here, with momentum slightly diminishing, although stochastics are at the right levels, where a bullish trend has been established ever since prices had leveled off near its channel support at the 96.91 level. And prior to this movement, when it touched this resistance level, see if we can get it here at the 99.13, before the weekly closed on a higher note, the tail or the wick or the shadow, as some people call it, has moved lower, indicating that there may be a possibility for a continuation down to this previous support level. And however, it did hold as far as the trend line support for the dollar yen is concerned. Looking at these bars on a weekly basis for 3 consecutive weeks, it has been established and defined that the dollar yen, of course, that is after the fact that the dollar yen is moving originally from its directional trend. Remember that the gradual yen orderly rally of the dollar yen in itself can only be seen on a weekly basis, because on a daily basis, let's see if we can get it here. As you could see that it had after breaking that resistance, it had become more of a steady ladder-like manner before it actually moved and touched its channel resistance here. As you have noticed, this particular chart has a red background, but this background is significant in the sense that it is used as a key factor for us on a color-coded chart, that we can use this as supports and resistances where the prices has been confined within that symmetrical triangle formation. But we are not basically looking at it more on the technical angle, but as a combination of price action as well as fundamental factors alongside with the technicals. Just a side note that trading the foreign exchange market or in any particular instrument, the technicals does not always apply in this case, because the price action, the volumes, the trader sentiments, a similar note has, if you would notice here on the cross rate on the sterling yen, we have used the sterling yen as our main indicator for the dollar yen as well as cable in itself. There is a similarity as far as configuration is concerned, or rather the chart formation is concerned, as you would see here that there is also a small triangular formation or symmetrical triangle here within this channel support, within another equidistant channel support here, maintaining and finally breaking above the 161.71 level, where a follow through on the weekly has been made prior to this week's movement, a continuation where more influence of the sterling's rally as well as the dollar yen, contrary to some of the mixed reports that we have heard from the market in itself, because it was quite a contrary decision for us to be holding into this rally at this point in time, because of the fact that the market has played, or rather the prices have played within a certain market conditions where both dollar yen long and cable long had been more profitable for us for the past for the past few months now, actually ever since November, first week of November, towards the current market conditions right now. Let's see if we can draw something similar so it would have some visual effects here, where we put the, there you go, the triangular formation here that we have used as a resistance line and a support, and at the tip of that particular apex on a weekly basis, it would reflect that the prices had moved, and that was actually the first signal that prices would continue to move higher, and for cable to have more of a probability and a potential currency pair to be able to hold this particular rally. Nonetheless, as far as cable is concerned, as you could see here, where we can try to draw a rectangular shape where the actual, let's see if we can get it right here. There you go, where the channel, or rather a perfectly shaped Donchian channel, had been established, where the actual movement here, although the confirmation on cable after penetrating the 1.6239 to the 50 level had only been made this week, prior to today's or before the Thanksgiving holiday, and prices right now have reached its initial target where 1.6350 level would be met. However, as you have seen here, this is actually the other trading account that we are using as compared to the other one that we presented on the price action analysis. As you could see here on our recent November 28th price action analysis, based on actually on November 27 price levels or the chart, you would see that this is from a different account, although the same configuration has been made when we have two other positions here on long on cable and another long here on the dollar yen on a weekly basis, which is really quite important to note that, as we have made mention, that the correlation of the currency pairs in our previous insights on the 25th has been defined, and that these three major pairs have appropriately been chosen as the most potential amounts where a potential run for the money could be made, and it's still being made right now as the market is still live in the Asian trading sessions. Now, with that said, apparently the prices would hold, and there's only one trading day left today, which is a Friday, a short trading week after the Thanksgiving holiday. But apparently the spillover for next week would still be made, although here we're considering already taking at least the third position here, as far as oops, not yet, not as of now, because normally what we would be doing a market order liquidation on cable, but we would be considering that at the end of today's trading. But apparently what we normally do is we place a trail order on the way down, even if we lose a few pips, instead of taking it out simply, but at least giving the market a chance, not being greedy at that. But more importantly is we do have a strategy in place, where that's why we scaled up our positions once we have seen that there is still a potential here where the market would be supported by the sterling yen cross rate, as we had made mention that there is a diminishing decline factor for cable to hold its lows or its prices, simply because sterling yen has been more supportive, and that of the dollar yen in itself, because there's really no logic. However, as far as logic is concerned, taking positions on both currency pairs long or buy the dollar against the yen and buying the cable against the US dollar. That's basically a contrary strategy, not a contrarian strategy, but more of a strategy where the fundamentals have played a bigger role other than that of the technicals, because the prices simply walk through the fundamentals that supported both currency pairs on that particular direction. As you could see that all three pairs, which we normally call the Three Stooges, basically are in a rally, a reinforced trend where it is quite difficult to contradict at this point in time. Although not a lot would be encouraged, or not even we would not encourage for other people or traders to go in at these prices. Although, like we have defined, that it is a reinforced trend, and going through the next few weeks would really depend on what other fresh incentives that the market would provide for these currency pairs. For now, all three major currency pairs have held their prices while supporting their identical trend direction, moving higher, which can now be seen after the fact, of course, where it's a known fact at this time that price action can oftentimes defy or outweigh some fundamental reports and give some justifications for the technicals to move in, although some analysts would really, and traders would really disagree to such a strategy, because if we were wrong, then the amount of loss would have been double. But the risk factor here, looking at taking that particular position here on the dollar yen, has been justified simply because if it did penetrate lower and went down, then your risk of losses would simply be minimal, considering the same thing here, because you're looking at a good channel support and you're actually using the leverage that you already have made in floating profit, as far as additional, making use of your additional gains, although they may be floating, but you're using your leverage as part of a strategy without having to use your own actual capital involved. And that is also scaling up here, and taking it out on the way down would be more logical. Simply at this time, there may be also be a configuration in the making where a Gartley formation would be made both on a weekly or a monthly, depending on how you perceive the market. So it's a matter of choice. More importantly is trailing the market on the way down to liquidate the third position would be more logical. And besides, it's almost end of the year, and that is what we were pertaining to, that we would be doing our trading break soon. But apparently the market at this point in time has really been in better shape for us and for the funds that we do manage. So again, hope that this video presentation justifies our price action analysis, where it had played a vital role in this particular two major, should we call it a major trade that we have made apparently for the past couple of months now. But more importantly is the fact that prices has moved, and this is still a strong trend. Going against a major sentiment at this point in time would not be advisable, and always be cautious of the trend. As they say, we never guarantee that this performance would still be the same for future results. So again, only the best for your trades, and have a good holiday season. Thank you.